A new report suggests short-term rentals are not causing long-term rents to rise. The Conference Board of Canada looked for a link between the two, but says it found no compelling evidence Airbnb activity is causing rents to go up. For more on this, we're joined by Tony Bonen. He's the Director of Economic Research at the Conference Board of Canada. Tony, thanks so much for joining us today.
Thanks for having me.
So I thought your report was really interesting and touches on a topic that we've talked about on the show before, and other research that has looked at the link between this, that, the increase in Airbnb activity, especially the commercial sort of activity, has led to rent increases. And I think that's probably why you focused in on this, because it's something we hear a lot about. And, when you're thinking about housing affordability, what are the different sort of levers we can pull to try to make things better? So what did you look at that led you to this conclusion that the two aren't connected?
Yeah, well, that's exactly right. I mean, our motivation was to understand the housing affordability crisis that we've been facing for 5, maybe even 10 years. And over that time, not just housing prices, but now rent prices are going up very fast. And we wanted to understand how Airbnb activity was contributing to that, and specifically, to what extent could we say Airbnb activity is causing rents to increase. Clearly, there's been a correlation between these two things, Airbnb and rents, but using a unique set of data from Airbnb, so this is the record level information of the actual units they rent out through their website, we were able to study at the patterns of rental prices and also activity at a neighborhood level. And when we started controlling for that really local level impact, we weren't able to find any discernible impact on prices from Airbnb itself.
At most something like $10 or so?
That's right. So look, we were quite surprised by the results ourselves.
Yeah.
We really expected to find some kind of causal relationship there. So when we first got these results, we threw the kitchen sink at the data. We tried everything. And in some cases, we tried to assume, for example, that Airbnb activity was at the 95th percentile across the country, across all 330 neighborhoods that we were studying. And when you start treating the data in this way, you can start to see some impact. But even in those cases, the impacts are pretty minimal in terms of the magnitude on the overall increase in rental prices.
One part that I thought it did raise some questions for me was the idea that you were looking at purpose-built rentals, which is something that you flagged, that's what you were looking at for those rent increases. And I was thinking, well, my goodness, it seems like most places that are for rent in a city such as Toronto seem to be condos, but then actually the data doesn't show that. It's mostly purpose-built rentals in Toronto. Well, there's about, I think, of new listings, a little less than 50% are condos, but those seem to be a lot pricier than what you would get for a purpose-built rental.
Yeah, you're absolutely right. So purpose-built rentals was the segment of the market we focused on, and we had to do that because of the available data. So we used, in this case, for rental prices, CMHC's rental price survey that they do annually, a very robust set of data that allowed us to drill down to that neighborhood level that we wanted to focus on. But it is limited because it doesn't cover the entire rental market. But in our view, this shouldn't make a major impact on our findings, because any impact that you see on one segment of the rental market should be transferring over to the other segments of the rental market. Even though it might be hitting the rented out condos first, you should expect that price impact to sort of even out across the entire market. So yes, it's a limitation, but I don't think it's a terribly concerning one for us.
What sort of reaction have you gotten to this so far, Tony?
To be fair, a lot of skepticism, which is, I think, justified. I mean, there's been a lot of research done on Airbnb activity, and the sort of clear correlation between activity and rental price increases leads one to assume that rents are being driven up because of Airbnb. But of course, what we were trying to do is say, well, what are the other factors? Like, is the neighborhood becoming more desirable, and that's increasing both rents or Airbnb activity? Or of course, the causal connection could run the other way. Rents are going up, and that it compels people to start finding units that they can rent out as Airbnbs because it's a better investment for them. So there are a lot of different factors at play here, and I think skepticism is warranted because we weren't able to find a clear causal connection. But I think we're very much in line with the other research that's out there. It's just we're looking at a more detailed neighborhood level than most other studies do.
You also looked at areas where there have been policies put into place to limit Airbnbs. Can you tell us about the impact or lack of impact that you saw there?
That's right. So we wanted to see what was happening when Airbnb first entered a city in a certain neighborhood, and then what happened after controls or restrictions on Airbnb rentals were put in place. Not surprisingly, we don't see any impact on price, just as you don't see an impact on price when Airbnb enters. When Airbnb activity is drawn down because of regulations, prices aren't affected. So it's a corollary of our initial finding. But we do see a major impact on Airbnb activity overall. So the number of units does go down when regulations are put in place, as you would expect. But again, prices aren't being impacted in any meaningful way.